We start with our Newsmaker segment and take a look at the state of the economy nationally and in the metro area. There is no one better to discuss these topics with than our guest. He's economist Dr. Chris Kuehl, managing partner of Armada Corporate Intelligence in Kansas City. Chris, welcome back to Ruckus. Pleasure to see you again.
Thank you.
President Trump says we are living in the best economy this country has ever seen. Do you think he's right?
Right now, he's not far off. I mean, we're looking at growth that is faster than we've seen in probably the last decade. We're thoroughly out of the recession. We have very low unemployment rates. But as most economists, my job is to point out the dark cloud behind the silver lining. All of that growth and all of that low unemployment tends to bring inflation in its wake. And that's the biggest concern we have now, is that by the end of the year, we'll be looking at higher prices.
The most recent GDP report, gross domestic product, the total of goods and services in the United States, hit 4.1% compared to the previous quarter. That's an unusually high reading, is it not?
It is an unusually high reading. A little bit was juiced by what's going on with trade and tariff activity. We had an awful lot of companies trying to beat the tariffs and doing a lot of business early. We've never sold more soybeans to China than we did in the last 2 or 3 months, trying to beat those tariffs. So probably a point of that growth was a little bit artificial. But even with that, you're still looking at growth over 3%.
A number of analysts and the president say the GDP soon could go to 5% and maybe somewhere higher in the 5s.
Very unlikely. It's very hard for a country this big to sustain that kind of growth for very long, mostly because it tends to trigger inflation. It has kind of its own end built into its development. I think it is realistic to have us in the 3 range for a year or two, which is pretty healthy for the U.S. 2.5 has been our average for the last 10 years. And if we just up that by 0.5%, that's pretty good.
Chris, how important were the tax cuts and the cuts in regulations to the growth of the economy?
They were pretty significant, particularly for the business community.
And that's just standard Republican policy, is it not?
It is. The only thing that was different about this is it came a little bit later than...
And it actually happened.
Yeah. I mean, the expectation was that if you're going to do a tax cut, you do it a little deeper into the recession, maybe in 2014 or 2015. But business took advantage of it, a lot of investment, a lot of expansion. The consumer didn't really respond too well at first, but they sort of caught up when the summer arrived, vacation spending and the like. So right now, the big question is, will they continue to spend into the consumer half of the year, which is really starting about now.
Looking a year out, how do you see things for the national economy, and then how do you see things for the local economy?
I think our biggest threat will be inflation. I think by the end of the year, we'll start to see pretty significant inflation. Then we have to watch the Fed to see how fast they will clamp down.
But we have inflation because things are going well, right?
Exactly. We're having inflation because we're seeing growth. We're having inflation because the unemployment rate is low. If we manage that inflation, it won't take that much of the wind out of the sails, but it'll take some. If the Fed has to clamp down hard, that's when you begin to worry about a short but sharp recession, kind of like we had in the 80s.
When you listen to business news experts talk about Wall Street, they say volatility is there and it's there to stay, meaning you'll see the market fluctuate dramatically day to day or within the same day. Is that your expectation?
Yeah,
as well?
And it's also sort of added to with the uncertainty over trade patterns, which is part of what's making the market nervous now. We don't really know what the expectations are with Europe, with NAFTA, with China. 1 minute we're at war, the next minute we're not, and that creates a certain amount of uncertainty.
Are you concerned then about the tariffs and the battle between the U.S. and now China over raising tariffs?
I am a little bit less worried about China as I am with just the general steel and aluminum tariffs. We're not a steel country. We are a manufacturing country, and right now we're sort of hurting the manufacturer to help the steel maker, which is kind of odd because one's much bigger than the other.
But the U.S. has always had tariffs. It's just a matter of raising the tariffs, and that's
We've always had very high tariffs against China. I mean, it's much higher than they are now, and deservedly. China does a lot of things that are inappropriate for a trading nation.
If I recall correctly, although I wasn't living at the time, when this country came into existence, that's where we got money for the government, was through tariffs.
Right, exactly.
No taxes.
And that's how people became wealthy at Cornell University.
Great to see you, sir. Thank you for coming in.
Thank you.
economist Dr. Chris Kuehl. Now let's meet the panel and start a ruckus.